Welcome to this webinar. This is the 9th episode of the ERIA MSME Talks, and we will discuss about fintech and digital payments. I am Giulia Myanmar, ERIA Director for Strategy and Partnership, and let me start by thanking all of you for connecting to our discussion today, and clearly also our 5 speakers. We are particularly lucky today. We have 5 speakers, 3 leading entrepreneurs from the region and beyond, and experts from MDC Malaysia and the World Economic Forum. I will introduce speakers in a minute, but before that, let me just highlight a couple of interesting features. So our discussion today will be about fintech and digital payments, and the region, the Asean region, is a region that is very dynamic with respect to these issues. I think many of us are fully aware of super apps like Grab or Gojek that have developed e-wallets for ASEAN consumers to use in a simple way, and are also connecting people that are not so much part of the traditional banking system to different financial services. According to a recent report by the United Overseas Bank, the number of fintech firms in ASEAN has increased by 3.5 times between 2014 and 2019. And also foreign investment into fintech firms has increased steadily over the last few years. Digital financial services has also seen a rise because of the pandemic, with the average proportion of cash transaction decreasing over the last year about 11 percentage points. However, despite these dynamisms, innovation, and the positive outlook for the region, still challenges remain. Often fintech challengers need to scale up and build critical mass in the region, and they need to still operate in a market that is somehow fragmented because of the different rules, regulation, and laws across the 10 different ASEAN member states. So we will talk about all these and probably more with our 5 speakers. And just before introducing them, let me remind you to please keep your microphone on mute throughout the entire duration of the webinar, but feel free to interact with us throughout our chat box, especially to ask questions to the speakers, because we will get back to these questions, your questions, at the end of the webinar during the Q&A session. And now to the speaker. We're extremely happy to have with us Ye Myat Min, who is the CEO of Next Labs from Myanmar. He has been building digital products for organizations across Southeast Asia since he was 17. And in 2013, he started Next Labs with a mission to build digital solutions for Myanmar organizations and create economic opportunities for the people of Myanmar using technology. His clients include banks, microfinances, and insurance providers. And he's also an active mentor in the startup community. Aside from Next Labs, he sits on the board of CCI France Myanmar, as well as a few startups. And he was also recognized as one of Forbes 30 Under 30 Asia in 2016. Welcome and thank you, Ye Myat. Many thanks also to Danny Muslim, founder and director of BIP Digital Solutions from Brunei. Danny started his entrepreneurial career after 6 years at the Brunei Economic Development Board, where he was overlooking industrial development through foreign direct investments in Brunei. He's one of the founders of BIP, which stands for Brunei Easy Electronic Payments. BIP is the sole Alipay acquirer in Brunei, having served more than 100 merchants who are now able to accept cross-border payments from Alipay users. And BIP is now in the midst of expanding its merchant service portfolio to include digital commerce capabilities. Thank you, Danny. It's also a great pleasure to have with us Norizam bin Abdul Kadir, Hizam, Vice President at the Malaysia Digital Economy Corporation, MDC. He brings with him 20 years of experience in multi-market technology and energy industries in various markets across Asia Pacific, He was with Intel, Microsoft, Ballard Power System before joining MDC as a vice president in 2015. At MDC, he currently oversees new growth areas with key emphasis on fintech and Islamic digital economy. And he's responsible for building and growing the ecosystem to set Malaysia as the hub for inclusive and Islam fintech. Prior to that, Islam worked in various laws to manage and develop tech start ecosystems. And he holds a bachelor degree in communication from Purdue University in the US and a master degree in corporate marketing and communication from the University Putra, Malaysia. Many thanks, Hizam. It's also a pleasure to have with us Kimberly Boatwright, who is the Community Lead Global Trade and Investment at the World Economic Forum. Previously, she worked at the International Center for Trade and Sustainable Development, ECTSD, and the Organization for Economic Cooperation and Development. Kimberly holds a Master in European Economics and Policy from l'Institut d'études politiques de Paris, Sciences Po, and a Bachelor from the University of Oxford. Many thanks, Kimberly, for being with us today. And also, it's a pleasure to have in the panel Pritam Basu, who is the founder of Bozeman, a company based in London and the Silicon Valley, and a multi-award-winning fintech entrepreneur with awards from the likes of Singularity University in NASA Research Park, California, UNICEF, Innovate Finance. Bozeman is building a web of fintech products globally in the credit, investment, and consumer banking space. And they were building one of the Valley's first robo-advisors, Future Advisor, then acquired by BlackRock in 2015, and have also built and scaled products at Skype, Facebook, and unicorn startups like Palantir and Intercom. Bozeman was also officially selected by the Tokyo government in 2018 to bring their investment product to Japan. And they are now focusing on different regions in the world, such as Latin America, US, Europe, Japan, and South Korea. Thank you very much, Pritam. Given the lineup of speakers, let's immediately start with the first round of questions. And I would start with the perspective from the two Asean entrepreneurs. I would ask them to share with us what made them interested to start a fintech business and how the sector has been in their respective countries. And let's start the round with Yemiat in Myanmar. Over to you.
Thank you, and thank you everyone for joining us this afternoon. My name is Yemiat. I run a company called Next Labs. We've been around for about 6 years. We've been helping traditional financial services companies to innovate. So that includes banks, insurers, microfinance companies, etc. What really inspired us to start in Myanmar? Well, number one is my home country, but number two also because Myanmar had a fantastic opportunity where we were able to completely leapfrog an entire generation of technology. What I mean by that is everyone in Myanmar skipped through the entire era of desktop. So most of the digital activities and technologies that we're seeing today are built around mobile technology. In 2013, something incredible happened in Myanmar, and that is the price of a SIM card used to cost around $2,000 just before 2013. So obviously not everybody had access to the internet and access to smartphones and all that. But in 2013, the government revolutionized the whole telecommunications industry, and therefore the price of each SIM card becomes $1.50 overnight, which meant that over the next 2 years, in 2014, 2015, the adoption of internet in Myanmar just exploded exponentially, just like that, just overnight. So what that means today is that Myanmar has 80% coverage for the internet, and actually we have 55 million people, out of which 22 million actually active internet users from their smartphones. The good thing that happened is our internet revolution was just in time with the decline of price of a smartphone. Therefore, all the smartphone first-time users, all the mobile first-time users, all the first-time internet users had access to smartphones. What that meant also is an opportunity for digital services, particularly in financial services. And the reason why is that only 30% of Myanmar population have access to formal financial services. Because of the lack of infrastructure, because of the lack of telecommunications, etc. We didn't have access to these services before. So therefore, in the last couple of years, a mobile-based fintech services has been on the rise, just because we had 80% coverage for the internet and smartphones, and yet only 30% have formal access to the banking needs. And without the use of technology, we'll never be able to increase that coverage for financial services. So in respective to our country's development, the fintech story has been one that's been very encouraging. Over the last 3-4 years, we've seen major entries as well as major homegrown startups in this space from both banks as well as from individual players. So for example, we've seen stories of Wave Money, which is a fintech company focused on mobile payments. Just over 5 years since they started, they've passed now $4.7 billion US dollars processed annually through their transaction systems. They have more than 50,000 shops, agents across Myanmar, which means that they're actually increasing the financial inclusion. We've also seen, just one more. We've also seen an entry of international payment providers investing in these fintech companies. So for example, Wave Money now is invested by Alibaba through Ant Financial arm of Alibaba. And secondly, we're also seeing traditional banks innovating in the space. KBC Bank, which is the largest bank in Myanmar, has launched their own version of digital payments in their wallet, and they've launched it about 1.5 years ago. And today they have been processing more than $1 billion in US dollars just over a year. So we're seeing a lot more growth in this sector with MFIs coming online because they need to accept payments for repayments from their customers. We're also seeing insurance companies coming online because they need to scale their insurance products and services more easily towards different parts of Myanmar. However, there are still challenges, of course, and I'm sure we'll be discussing about these challenges throughout this conversation. The key challenges that we're seeing in the country that we're tackling day in, day out is KYC problems. So like we don't have a robust national identity system, et cetera, which I believe we will discuss in a bit.
Thank you very much, Yemiat. Lots of dynamism in your country. Now let's move immediately to Danny in Brunei to get his perspective. Over to you, Danny.
Hello?
Yes.
Okay, sorry. Yeah, I think connection was quite bad. Okay, yeah, so hi everybody. My name is Danny Muslim from Brunei. So I founded a company called Beep Digital Solutions. So Beep stands for Brunei Easy Electronic Payments. So really our journey started, I would say 4 years back. And I think the opportunity there was that we realized that Brunei, we've been transacting very traditionally, so it's a very cash-driven society. A lot of transactions today are still undertaken through cash. So I think that's where we really saw that opportunity to see how we can digitize these transactions into digital payments. I mean, a bit of a background on Brunei. I think we have all the right recipes, all the right ingredients. Our mobile smartphone penetration is very high. I think it's in the range of the 90%. I mean, we've got good internet connectivity. The bank penetration is also quite high. So a lot of people, we do have bank accounts, but it's just that we are not really transacting using digital payments. So, and one of the reasons for that is that because we lack the proper infrastructure in place for digital payments. For example, today, we don't really have a local interbank network. So everything today, retail payments especially goes through the Visa, MasterCard network. And because of that, the cost of digital payments are relatively high. So it's a few things that comes into play. Merchants are not wanting to pay that extra cost to do digital payment processing. But I think the time is right. I think ever since a couple of years back, we've started to see a number of fintech companies come up. So in terms of the non-bank institutions. So I think ever since then, we've seen a number of wallets coming up. again, the usability, the use case has not been firmed up yet. There's not a lot of the usability is still quite relatively low. But I think where I'm getting at is that today, I think we are still being served by the banks, and what we see that, and the reason why we got into the digital payment space is that we see there's a lot of gaps that the banks are not providing for, or being left by the bank today. So banks today are the traditional payment service providers. So if you go to a merchant, you'll see a payment terminal provided for by the bank. Of course, there's the cost that comes into it. But a lot of micro merchant, there's still a lot of merchants out there that are not being served by the bank. So one of the things that we are trying to do today, and how we've positioned ourselves today as a digital payment service provider, is that we want to see how we can go beyond just payments. So today we have a platform called B+. So it's a payments it's a payments aggregator platform. But secondly, also we want to see how we can further facilitate the whole value chain when it comes to a commerce transaction. So being in the market today, I think we do realize what the pain points are for the merchants, and it's not just being able to accept digital payments. I think talking to the merchants today and having served the merchants today, they need more than just digital payments acceptance. So they need help in, say, digital marketing, commerce facilitation, and how to create that whole ecosystem through perhaps digital loyalty, POS systems, logistics, those kind of things. So today, I think to sum it up, for us as a payments provider, we look to provide more than just payment facilitations, which the banks are not providing for today. And I think for us, we really focusing and emphasizing a lot on how we can provide digital commerce capabilities to our merchants.
Thank you, Danny. I think we'll hear more about that, how you can provide a different service in the traditional banking system. Now let's go to Malaysia with Izam at MDC. So with MDC, you are leading a number of fintech initiatives. Can you please describe to us these initiatives, and also tell us about what you have seen in Malaysia with respect to the fintech landscape and its evolution over the past few years?
Sure.
Over to you, Izam.
Thank you. Like many other developing markets, with its growing middle class, high mobile phone penetration rates. In Malaysia, smartphone penetration rate has exceeded 80%. Government putting a lot of focus on digital economy. And in Malaysia, regulators are pretty progressive. I think Malaysia has evolved and very well situated to take advantage of the fintech innovation, from mobile wallets to electronic payments, to crowdfunding, to peer-to-peer, and recently crypto exchanges being approved by Securities Commission. I think Malaysian businesses and consumers are very much ready in embracing fintech in Malaysia. I mean, if I can give you some examples, and internet banking in Malaysia has quadrupled in the last decade, hitting more than 90% usage rate this year. Mobile banking, partly because of infrastructure supported nationwide with 4G, data becomes a lot more affordable, and adoption becomes higher because it gets coupled with infrastructure. Fintech gets a lot of attention, and mostly for the potential. It's just amazing to see how fintech being able to change life and change economies, and partly because the ability for them to be accessible via smartphones, the ability for it to be affordable. Some micro investment fintech companies are even allowing people to invest as low as RM1. And it's alternative because these are solutions. For example, microfinancing that are already available by financial institutions. These are new options given to businesses out there, right? At MDC, Malaysia Digital Economy Corporation, I look after this division that explore new growth opportunities, and fintech is one of them. We focus on three strategies. And being a government agency that leads spearheads the digital economy, it's important to look into how we would be able to increase capacity of technology companies, and at the same time as well boost up demand so that adoption can be increased. So 3 strategies that I mentioned, strategic imperatives for fintech in Malaysia. One, of course, strengthening the propositions for Malaysia's fintech community. We have a space called Orbit. So we position it as a nucleus for fintech in Malaysia, of which companies, large and small startups, are all congregating. We have presence of Visa, we have presence of Aeon, UNCDF set up their Center of Excellence within Orbit, and it becomes a point for innovations to happen, as well as opportunities for startups and large companies to come together and create innovation. We also have a program called Fintech Booster, www.fintechbooster.com.my, and it opens up to all fintech companies, especially those at early stage level. This is a capacity building programs. We're working in partnerships with Bank Negara Malaysia to help technology companies to understand compliance, regulatories, including Sharia compliance, because Islamic fintech is an important agenda for Malaysia. Business model, opportunities for them to be connected to potential POCs with corporations, for example, with banks, as well as technology, where APIs and data can be integrated. As of now, we have launched this in the middle of this year, fully online because of COVID-19, and we're going to be launching the second and third pillar business model and technology in Q1 next year. Great response. We have more than 300 companies registered right now and are benefiting from the partnerships with the partners that we have. And second strategy is on how do we globalize Malaysian fintech companies. You know, if you were to look at Malaysia, it's a pretty small market as compared to, say, Indonesia. Hence, how would we be able to, I'll be really quick since my time is up, right? How do we be able to export Malaysia's and pushing fintech solutions into other emerging markets? And last but not least, the focus on financial inclusion. If you were to visit www.eberkat.com.my, I think it's on the chat of all this linkage, of all these links. It's a platform to increase awareness and provide access to increase digital financial services adoption among SMEs and the B40s in Malaysia. So my apologies for taking up a bit more time.
Excellent. It was extremely interesting. So thank you so much for pointing and highlighting a different strategy of MDC in Malaysia, and also how Malaysia is regulating to promote these developments. So now let's get the perspective from Kimberly at the World Economic Forum, where they work extensively on the digital ecosystem in the ASEAN region. So Kimberly, what trends from your point of view are emerging in the region compared with other regions in the world, as you are a global organization? Kimberly, over to you.
Thank you, and such a pleasure to be here today, and also to represent the work of my colleagues and the fantastic community that we work with at the World Economic Forum. So there's a few different trends that we can highlight for ASEAN on digital payments compared to the rest of the world. So the first would be significant innovation. There's back in 2018, and this has already changed, but in 2018, there were already 1,200 fintechs headquartered in ASEAN. Which is a huge number. Secondly, and to come to more recent times, I think it's important to highlight the impact of COVID-19. ASEAN, like other regions, but I would say more so than other regions, has seen a huge uptick in digital tool adoption in response to the pandemic. A new Google Temasek report highlighted that cash as a payment method has fallen from 48% of transactions to 37% of transactions this year, while e-wallets use has risen from 18% just a couple of years ago to 25% this year of the population. The forum itself surveyed more than 68,000 people aged between 16 and 35 in our ASEAN youth survey, living in ASEAN economies, to find out how they have fared during the pandemic. And again, it highlighted that they've really leaned on digital payments and digital tools. about half of the respondents indicated that they had taken up a new digital tool, and that particularly related to making use of online shopping, food delivery services, e-banking, and e-wallet apps. And then what was also really interesting was that a third of entrepreneurs said that they had increased their use of e-commerce as a way to access consumers, and a quarter of them said that was the first time they'd done so as a result of the pandemic. And of course, all of that is reliant on digital payments. So despite this, I would say another trend that we see compared to the rest of the world is that there is very varied access to digital tools and payments. So not everyone has that opportunity despite the fact that there are many taking up these tools in the face of COVID, not everyone is able to do so. That may be a little bit similar to some other regions like Latin America, but it is different to Europe or the US, where there is less infrastructure issues. There's in ASEAN, there's less financial literacy and financial inclusion. And so this really presents a challenge for how the region can respond to COVID-19 and use digital tools going forward, if not everyone has the same opportunity. There are also quite some significant barriers to interoperability across the region, particularly around digital payments. So in ASEAN, there are very varying regulations from country to country on how digital payments are regulated. And that's very different from, to say, a region like the EU, where there's a higher degree of harmonization on the rules around payments and financial system services. We've also noted that local entrepreneurs find regulatory support from governments not as effective in ASEAN as compared to other regions. There's quite a high degree of cultural diversity. There's also emerging digital protectionism. So certain ASEAN economies impose barriers to service providers, financial service providers entering their market. And we see also the emergence of data localization requirements that can be really challenging for a fintech to navigate. Despite this, however, positive news, I will end on a positive note here, that there is a strong desire for integration. So perhaps because there are so many challenges, ASEAN economies have been very active in trying to integrate around payments in the last couple of years in particular. There is the ASEAN Central Bank Working Committee on Payment and Settlement Systems that is working hard to advance a number of useful initiatives in this area. And it's also worth noting that there are some regional leaders within ASEAN that are really driving collaboration with partners around payment integration, not only within ASEAN, but to the rest of the world. So initiatives done with New Zealand, with Chile, and so on and so forth. And an example is also Singapore, which has been very active in trying to work with other financial system regulators in other countries to try and reduce some of the friction around providing a financial service abroad, which is good, but we probably need to see a bit more of that, and I'll stop and happy to take questions.
Thank you very much, Kimberly. You summed it up perfectly. So now let's get the perspective from Pritam, an entrepreneur, a fintech entrepreneur outside the region, in London, a leading fintech hub globally. So Pritam, can you describe to us a little bit about the UK, US, and also Latin America fintech ecosystems to have another perspective? Over to you, Pritam.
Sure. Hi, everybody. My name's Pritam, and I'm the founder of a company called Bozeman. And what we do is we try to build really ambitious fintech products in different parts of the globe where we still feel fintech has exponential opportunities. So far, we've as Julia said, been concentrating pretty much on UK, Europe, US, Latin America, and also some countries in Asia like Japan and South Korea. Regarding the UK, I really think the UK has become a very, very competitive and mature ecosystem. It's got a very, very good and advanced regulatory environment. And there's a huge ecosystem of infrastructure players, which makes it very, very easy to sort of build a fintech product. And there's also quite a deep talent pool now. With regards to sort of the evolution of fintech in the UK, we've kind of seen two distinct waves. I think the first wave was, the banks charged a lot of high fees, their apps were really bad, and people came in and they removed the friction, had really easy to use mobile apps, and fees kind of became a race to zero in lots of verticals, like, you know, FX transactions and sending money and things like buying stocks. A lot of fintechs are doing that. And a lot of unicorn startups from the US and Europe had to leave the UK because it's so competitive in this space. And for the second wave, what we're seeing is we see more and more startups coming in the space of automation, in the space of automation and financial wellness. So it's kind of like we've made banking frictionless, and now we want to go to helping people automate their financial decisions. So I think Kimberly touched upon financial education and literacy, and we've actually spoken to lots of consumers, even in countries like Japan, Latin America. And I think what we found is that one of the reasons there's lack of financial education is people actually find finance a little boring, and they find it a chore, and they also find it quite emotional to sort of think about. So there are kind of these tools coming up now which automate part of your financial life. They help you save automatically, or they might automatically help you put money in a stock portfolio. And people are trying to make that whole optimization of your financial life more and more sort of useful to you. And I think this financial wellness space and automation is where things are going, at least in the UK and the US right now, because a lot of the obvious things have been done. On the other hand, Latin America is a very, very different story. I think the burning issue there is that, you know, in a lot of the countries, 60% of people are still unbanked. They seem to have a distrust of the financial system there, and interchange is very high. It costs a lot of money for merchants to accept card payments, so they're kind of reluctant to sort of do that. And the focus of the regulators seem to be really to enable this transition to electronic money. And Mexico's come up with the Fintech Law, which is a set of regulations that would help fintechs kind of operate in the regulated space, and also open up features like open banking in the UK, which allows you to share your transaction data and financial history from one banking institution to another one. And Brazil has also started its implementation of this, of their version of open banking, which is largely based on the UK's template for open banking, because UK and Europe were one of the first countries to implement that. And so they're really making a huge effort to try to get people to use to sort of get into the banking system. And I also think that trends, or like the proliferation of e-commerce there, is also helping people sort of see the value of you know, getting a digital wallet or getting a bank account. So yeah, I'd say these are the main things that we're seeing right now in these regions.
Thank you very much, Pritam, also for pointing at the fact of the importance of regulators. You know, I mean, good open banking regulatory practice can certainly facilitate the emergence of certain ecosystems. But now let's immediately start the second round, as I'm sure we will have a lively discussion at the end through Q&A. And again, let's start this second round with the perspective from the two Asean entrepreneurs. And I would like to ask them to share with us a little bit how the pandemic has impacted their businesses, or in some cases even presented new opportunities. And how do you see the sector evolving in the near future in your countries? And this time, let's start with Danny in Brunei. Over to you, Danny.
Sure, thanks, Julia. So in terms of how COVID has impacted our business, I think there's negative, but I think there's more positive that came out of it. So one of the big negative was that we are the sole Alipay acquirer for Brunei. So when COVID hit, suddenly our borders were closed. There were not any Chinese tourists coming in, and we went from processing about 160, 180,000 a month to down to, I think, 80, 90%. So that was a big dip in transactions for us. So it really hit us bad. So I think, and that was midway through our sandbox period. So we were actually on a high trajectory, and we had planned a lot of things for this year. But because of that, our transactions volume just skyrocketed down. But on the positive side, I think it really accelerated a lot of other initiatives that we were currently working on, which we were not proactively pursuing. So one of that was digital commerce, our loyalty program, our e-commerce. So and then suddenly we started talking to the banks. So I think now we've got a lot of active discussion going on with the financial institutions locally to see how we can introduce more solutions on top of what they're offering on top of the payment facilitation. So I think it had accelerated a lot of our other initiative, which were non-payments but payments related. So I think today now we're building a platform, trying to consolidate and trying to put together services that will be geared towards serving the merchants. So we've got this merchant services hub that brings together a lot of other third-party services, things like food delivery services, e-commerce marketplace, loyalty, POS systems, merchant sales CRM. So we are consolidating all that within our platform, and it gives the tools towards merchants to be able to now serve their customers better. So I think on an overall note within the country, I think because of COVID, a lot of digital initiative has been fast-tracked. I think we went from just a small number of food delivery platforms to, I think we've got a large number of them operating now in the market, and people are getting used to that. I think it's provided a lot of convenience. So people are starting to realize that, yeah, digital is probably the way to go. There's a lot of convenience behind it. There was a lot of good push because of COVID that geared us towards all this different digital initiative. So overall, I think we are set to gain more from what happened because of the pandemic, rather than the business as usual or status quo that we would have faced previously.
Thank you, Danny. Now over to Yemiat in Myanmar.
Thank you. For us, actually very similar situation in Myanmar as well, similar as what Danny mentioned. This pandemic was interesting in such a way that it accelerated, particularly in the government sector, in particular to government services. So before this pandemic happened, for example, if we wanted to pay for any of the municipal utilities, electricity, water, etc., everything is done through a cash-based transaction. But since pandemic happened, all of these services were closed down. The tax offices couldn't collect tax anymore, for example, suddenly overnight. Just within 3 to 4 months, our government had done a pretty amazing job, actually, working together with fintechs to bring on board these digital payment offerings onto government services. That actually sparked a new wave of consumer enthusiasm, because even consumers who are not in touch with any sort of digital payments are now using digital payments just because they need to make payments to the government. Right? So I believe that the opportunity in the future is tremendous around e-commerce, around merchant services, etc., just because now it's not only the payment players that are pushing for these digital payment ecosystem, but it's also the government itself that's actually pushing hard on it. In particular, to our government's plan around COVID-19 economy relief plan, e-commerce and digital payments are actually one of the most important pillars out of the 8 pillars that they have outlined. So they do want a lot of MSMEs to be accepting online payments, both online and offline. Both physical wall and virtual wall. And the government do plan to also decrease some of these transaction rates. As Danny mentioned, I think Myanmar the adoption has been slow initially, primarily because the what do you call it? The merchant transaction fees are rather high. So a lot of merchants are quite reluctant to accept these online payments. But with this new initiative, I think that will change. The other area where we see a lot of opportunities is actually around cross-border remittance. There's a huge population, Burmese population living outside of Myanmar in countries like Thailand, Malaysia, Singapore. And month over month, they are transacting, sending money back to the home country, to their families through a network of agents called Hundi. We call it a Hundi system. So literally it's paying money to someone. And at the moment, some experts estimate that market itself alone to be more than $40 billion annually every year. And there's no formal estimation because it's not a formal system. So there's a huge opportunity for both governments and fintech players to tap onto that cross-border remittance, only if the convenience and the transaction fees are as affordable as the Hundi system. So I'd like to summarize this by in one of our conversations, reflecting on one of our conversations with one of the regulators. In order to increase adoption, I think there are a couple of things that needs to happen. Number one is there needs to be lower fees across the board so that the consumers are willing to pay and the merchants are willing to accept. The trouble right now in countries like Myanmar is that it's somehow cheaper to do a cash transaction just because the transaction fees for digital payments are still very high. And in the case of Myanmar, at the moment, they're not very regulated. So that's something that we need to do. And secondly, the restrictions around digital payments has to be more relaxed. So for example, as of today, we can only put in around equivalent of $800 in our mobile wallet account. For a business, $800 is basically nothing. For a high volume MSME, that's a very limited amount. So such regulations needs to be relaxed. And thirdly, we also need to introduce more government services and actually make digital payments a default option for C2G services. By doing these, we believe this will create more opportunities for both consumers, merchants, and governments to increase the adoption. Lastly, the financial inclusion is also important. In our country, every company has been trying to push out financial inclusion and financial literacy activities, but the challenge is most of these activities and programs are not well coordinated. So instead of doing one individually, we also think that there's an opportunity for all of the whole industry to come together to run a coordinated financial literacy program which benefits everybody.
Thank you very much. Really, really interesting to hear about your suggestions for regulators in your country and perhaps also outside. Now let's continue this journey across different trends in individual Asean member states. And let's go to Malaysia with Gizam. What can you tell us also from your perspective of a Malaysian agency about trends during the pandemic and how do you see things evolving in the coming months in Malaysia and also across the region?
Got it.
Over to you, Gizam.
Thank you. I mean, 2020 has been an exciting year. It almost at the end, at the blink of your eyes. When it comes to trends, I want to be a bit more optimistic. While the looming recession triggered by COVID-19 has dampened consumer sentiment, it reduced overall spending. Many governments have launched various incentives to stimulate spending. In Malaysia, there's programs like Penjana Prihatin. Government put aside more than 250 billion ringgit to increase the economy and stimulate the economy. I do believe that this behavior will eventually self-correct itself as economies move into recovery. And hopefully, COVID-19 goes down, fingers crossed. I do believe as we get into recovery, consumer spending will double, and partly because Southeast Asia is a growing, there's a booming middle class. And this booming middle class eventually will then fuel the double, triple, quadruple consumption in the region. I think Asian Development Bank has estimated that, of course, this year, I think GDP growth of all countries in ASEAN will go down, but it will rebound to 5%, if I'm not mistaken, in years to come. The other one is with regards to a second trend that I can think of is with regards to digital technology, how technology has torn down socioeconomic walls. In the current scenario, COVID-19 pandemic, it has accelerated digital transformation. Especially the macro SMEs, the B40s, they have no choice but to be using digital to help them, especially with their businesses. And government realizes that and has improved connectivity and increasing opportunities for these vulnerable communities to be getting access. As rural and low-income communities gain access and exposure, similarly to urban or their higher income counterparts, I do believe that digital has sort of homogenized that consumer behavior. And that's great because it will then help remove the barriers for small businesses, especially the micro, the nano entrepreneurs, to flourish and being able to deliver their services in a massive manner. Third trend that I can think of is probably convenience is a new currency, right? I think I tend to be eating in. In my household, we tend to be eating in a lot more, partly because of COVID-19. But this convenience it has its pros and cons as well. I mean, consumers are willing to give up data privacy for convenience, right? So there will be new opportunities from that angle. There's this huge opportunity for super apps and fintech would then be able to be streamlined across such verticals. For example, shopping, food delivery, and all that can then be linked into one single super app. Another trend I can think of is, and we've seen this even before COVID-19, local brand has become to be a lot more visible. ASEAN consumers tend to be preferring local brands. I mean, local brands never had a chance to be visible because digital marketing wasn't big back then. Now, ASEAN consumers prefer local brands, especially in categories like food and beverage, in cosmetics, or even apparel. Yeah. And this trend, to me, it's a lot more significant, especially in times of crisis like this, as all of us, communities tend to have initiative that supports local, right? Similarly in Malaysia as well. And this has, while it may not solve the problem, the economic problems of the macro SMEs, I mean, there's still challenges, but it has helped to fuel and support them so that they will not go bankrupt completely. I believe that, with this trend, ASEAN is poised to become a dramatic consumption opportunity driven by this trend. And over the next decade, ASEAN will become the world's, I think, fourth largest economy. And this region, it's a gold mine, especially for foreign direct investments, that offers abundant growth opportunities. But the challenge is each market in ASEAN are sort of different, and it will evolve differently as well. And as companies getting into ASEAN, they will have to be mindful of different level of customization.
Thank you, Dan. Perhaps we should all become entrepreneur in ASEAN. Thank you very much. It was very interesting, and actually this trend towards local preferences and consumption patterns has been observed also in other countries outside the region. And I think it will be very interesting to see how things will evolve. But now, I mean, let's continue and let's move to Pritam now in the UK. You told us before that you have also worked in Asia, notably South Korea and Japan. So what distinctive trends have you observed in Asia compared to other regions in the world? Pritam, what can you tell us?
So Japan is quite an interesting case because its problems seem to be kind of the opposite of Europe and the US. In the Europe and US, people save very little money and they borrow a lot. So there's really high consumer debt, and I think there's something like around half of people in the UK have under £100 in savings, which is crazy. But in Japan, people actually save a lot of money. But the problem the government's facing and is worried about is people save a lot of money in sort of zero interest rate accounts. So this sort of, I think it's something like 17 trillion in household assets that Japan holds, most of which is in cash. So this money is actually not going back into the economy. It's not being invested in the stock market. And that situation concerns the Bank of Japan. So what they're actually really hoping for is to bring guys like us or other companies who can sort of create products or build sort of infrastructure components to their ecosystem, which sort of entices people to see the value of investing money and sort of not keeping it at home. In fact, we saw a statistic where since interest rates turned negative in Japan, the sale of safes, physical safes to store your money, actually increased. So it's like, it's really fascinating. The other issue in Japan, that was only true a couple of years ago, but the regulators have really done a good job of sort of changing regulation to help fintech, it was actually not possible to digitally onboard a customer for a bank account without sending them a physical letter by post. So that pretty much killed all fintech propositions, and us and a lot of other fintechs who came into Japan sort of told them that, and they've been implementing those changes. But I feel the government in Japan is putting in a very good effort to try to do what they need to encourage fintech. And the Japanese banks themselves are really, I mean, the fees are really high. They're an oligopoly as well. They have no incentive to change. So I think fintech is a very important component, and slowly things are changing. And I think the pandemic has also helped in Japan drive adoption into newer services.
Thank you very much for this overview of what's happening in other countries, other regions beyond ASEAN. Now let's conclude the second round before Q&A with Kimberly at the World Economic Forum. You have this initiative called Digital ASEAN, where you also have created the various working groups and actions on digital payments. Can you tell us a little bit more about the activities of this group, and also what kind of suggestions for policymakers you have identified? Over to you, Kimberly.
Thank you very much. And again, here I recognize my colleague Tui Nguyen, who's on the line, who's been leading the overall Digital ASEAN initiative. I'm going to speak specifically to the work on digital payments as most relevant here, which is one of the pillars. So we formed a Digital ASEAN e-payments coalition with a diverse group of leaders from governments, international organization, and business. And the group really set a vision of success that includes a number of different aspects, but I'll highlight a couple. They have a vision that we should be achieving 100% of all ASEAN member state citizens to have access to financial services that are appropriate and user-centered in design, and that a lot of that will involve using digital technologies to achieve that. They also indicated that they also wish to see that any individual or business in ASEAN can pay and get paid by anyone instantly, both regionally and globally, through a range of cross-border payment methods, best matched to a variety of use cases. There's a lot of variables there, but essentially we're talking about choice for entrepreneurs, for consumers, and also the ability to be able to sell and get paid across borders, which is really important. And I think the area where ASEAN is poised to really explode. There's a lot of good activity happening domestically, but now we need to unlock the real potential of digital trade, which is cross-border. So the ASEAN Payments Coalition released a report that's available in the chat function with a series of recommendations for policymakers. Those were organized into 4 key pillars, first being speed and convenience, the second being regional standardization and interoperability, third, financial literacy and inclusion, and fourth, trust and security. And I will note in the financial literacy one of the recommendations was indeed that governments needed to push the use of digital payments, which would then do exactly what the former speaker indicated happened in COVID-19, that people have to actually use these so that they can interact with the relevant government financial service. So it's really good to see that recommendation starting to be put into play. And I recommend looking at the paper for more detail on these quite complex issues. Just lastly to note, we submitted these recommendations to the ASEAN Secretariat, and we received feedback quite recently to work on a few more detailed issues. Those involve things like approaches to managing risk associated with cross-border real-time payment systems, liquidity and counterparty credit, and other types of risks. They're asking for recommendations on a regional consumer protection framework. This goes into some of the issues that were raised by former speakers around what do we do about privacy in this brave new COVID world where everyone is going online and sharing their data, but do we have safe systems? Is our data being treated responsibly, etc. And we also have a piece of work that complements this Digital E-Payments Coalition, which looks specifically at the cross-border data flow issue and how governments can better collaborate together on ensuring that data can flow while achieving high standard domestic regulation around privacy, financial system security, and so on and so forth. And on that regard, as a next step, we will be running workshops in certain ASEAN economies over the next 3 to 4 months, specifically designed for public-private dialogue to understand how we can have the data flowing across borders, but business can easily comply and not be bogged down by regulation, but equally that consumers are safe and well protected. So these are all areas that we're looking into. They're emerging aspects of regulation, but they're very important to get right.
Thank you very much, Kimberly. I think that there are already many questions in the chat box. So I would immediately give the floor to TJ to start the Q&A.
There really were quite a number of questions, but the speakers somehow had the opportunity to also answer a number of them. Let me go to one question that was very interesting, and I would probably, given the time limit, just assign this question to one of our entrepreneurs as well as probably Hizam to share your thoughts on. Now, the question goes a little bit like that. I think all the speakers talked about the regulatory environment. A question was posed in terms of what is your perspective of what the government could do as far as regulation is concerned when it comes to the tech giants. Because on the one hand, you are trying to develop the local players, but on the other hand, you have these big tech giants that are probably in your own countries. They already have the established systems. Do you tighten regulations so that you facilitate growth of your domestic fintech digital payment companies? Or do you really go the other extreme where you relax the regulations, but because of free market rules, you may end up killing the local players? Maybe let me pose this question to Yemiet first, and then Kimberly could share your thoughts together with Hizam. Yemiet, if you could share your thoughts on this.
Well, that's a very difficult question and $1 million question indeed. Because we actually wonder sometimes as well. And when I was speaking, so there was a dialogue happening between a couple of payment players and the regulator just a couple of weeks ago around this as well, whether we should protect or we should encourage to innovate, or we should increase the regulation, right? And the consensus that we got into, or rather the idea that we got into, conversation we got into, was that there should be a level playing field. The role of the regulator is to encourage innovation. Yes, the free market principles will apply, and therefore international players or even the big local players will have more opportunities and will have leverage because of the resources, right? But I do genuinely feel that in the world of technology, size almost doesn't matter. There are the small startups are can equally be aggressive as the big companies. In fact, I would argue that in the world of technology, being big also means that you are very slow. You can be very slow, right? Because of the weightage and the etc. But in the case of my own country, in Myanmar, the challenge that we see is the barriers to enter into this whole world of financial services, not even fintech, the whole world of financial services is actually very high. the cost of acquiring a license is very high. And unlike Singapore, Malaysia, or Brunei, there are no sandboxes whereby startups can innovate within a certain environment without having to acquire a full license. There are no such things as well. So therefore, in our own country, I think what the regulator needs to do first is to create that level playing field where startups can actually start to innovate and introduce new innovative ideas and products into the market while staying within the regulation. And I think that's absolutely the right pathway to do. And once we have that, then we can start looking at how do we encourage these smaller companies to be partnering with the big companies. Now, I also see that there's actually another side of this table where we need to also look at the big banks, etc. We need to change, or rather we need to also help them understand that yes, they have the resources to do everything, but it doesn't mean that they should be doing everything, right? In everything from scratch. What we're seeing in Myanmar is big organizations are now actually doing everything kind of from scratch, but they do have the opportunity to cut their time by half, or if not more, by working with a startup or working with a fintech. So by doing that, I think the smaller companies will have an equal opportunity as the bigger companies. But at the end of the day, I think all we have to remember is that we're not, yes, there's market competition, but at the end of the day, there's a bigger picture that we need to focus on, right? Which is we need to look at a wider adoption of digital payments. And at the end of the day, I feel that we're all just fighting against cash, right? We're not fighting against each other. We're just fighting against cash. And as long as we remember that, I think there are certain compromises and opportunities that we can all tap onto together.
Thank you very much. Thank you very much. Kimberly, a quick sharing from you.
Yeah, I fully echo what the previous speaker said. I thought that was a brilliant intervention. The point that I was going to make is that if you start to put walls up as an economy or around your national economy, likely two things could happen. You may find that your neighbors do the same. Thus, you're going to end up limiting eventually your own service export opportunities. But equally, you reduce that opportunity for choice within the market. And I think all the points that were made by the speaker previous speaker were very good, is that in the end, the job of the regulator is to create a level playing field. And that in those conditions, very likely is what happens is you have a lot of different offerings, and if you end up having a dominant player, the way to tackle that is probably not with trade restrictions or targeting kind of putting up barriers, but to look at competition policy, which again is a fairer way of not necessarily discriminating between foreign or domestic, but a more level approach.
Thanks very much, Kimberly. I will have Hizam share and then end off with Danny before I hand the floor back to Julia. So Hizam, if you could share your thoughts.
Okay, I'll be really quick actually. It's a catch-22 situation. But in the case of Malaysia, we are relatively small. So it's an open economy that allows foreign companies to come and set up presence in Malaysia. At least within digital economy, we have always welcomed foreign players to come in. Yes, in the case of fintech, there are always issues with regards to regulation. But we've seen central banks, securities commissions have been very, very open in welcoming the likes of Alibaba, Tencent. In fact, Alibaba works very closely with the local company Touch 'n Go in Malaysia for one of the biggest e-wallets in Malaysia right now. Right, we do see ICO Exchange, Luno is in Malaysia. Who else? Wahid Invest, New York-based Sharia compliance robo-advisor is in Malaysia as well. The way I look at it, again, I think Kimberly mentioned about open competition. We welcome, because we do look at it from a developmental standpoint. The more foreign companies come and set up presence in Malaysia, it means it brings revenues to government's coffer, and it creates job opportunities for Malaysia. Right. At the same time, I guess this is also a tough call for local companies. This is a signal for them to work extra harder to go and bring that competitive advantage. So it's a challenge for both sides.
Okay, thank you, Hizam. And Danny, your quick thoughts.
Okay, yeah. So quickly, I think we still do need those big players, especially for a small market like Brunei, or a developing market like Brunei. So I think where government regulators comes into play is that we also got to help the locals. So I'm in a view that there should be some form of partnership or some form of spillover for the smaller local players. So I think we generally and personally, I feel that I would welcome them coming in, but I think we also need that partnership to be forged between the smaller local players.
Thank you very much, Danny. So in the interest of time, I think really it's very interesting to hear the different sharing across the broader perspective as well as from the individual entrepreneurs. Again, you know, from all the sharing, it does boil down for entrepreneurs, business people, always be thinking out of the box. Just because, like what Yemiat was sharing, just because a company is big does not mean that it will kill you. But rather, you know, when a company is big, there are opportunities. You can always look at what is the other side on the fence, you know, to be able to find what is the next better opportunity. So with that, I will hand the floor back to Julia.
Thank you, TJ. And before closing, I would just like to ask Pritam to give us a final comment also on his side.
Yeah, with regards to what everyone's saying about regulation, it's one of the most important pieces. And I'd also highlight like some of the work I think the IMF and World Bank have been doing in getting global regulators together to sort of share their experiences and get people to exchange ideas and communicate. But on the whole, for every region we've been to, we found the regulators extremely willing to talk, to understand, and they really, really want to level the playing field and sort of make the right decisions to unleash fintech, but at the same time balance the risk of, you know, it not getting out of control.
Thank you. I think you just gave us the perfect conclusion. We are running out of time, so it's time to close. Please have a look at the links that we shared to the chat box, some resources from ERIA, the World Economic Forum, and also MDEC, because I think you will find some answers to the question you had posed in the chat box. Thank you once again for this very lively conversation. Thanks to all participants for staying with us until the very end. And of course, many, many thanks to the 5 speakers, Kimberly, Hizam, Yemiat, Danny, and Pritam, for their excellent ideas and remarks they shared with us today. So thank you once again, and see you in 2 weeks' time for the last episode of this series, where we are going to discuss about MSMEs, startups, and innovation in ASEAN. So please come back, and we look forward to seeing you again. Have a nice end of the day. Goodbye.